this week's currency update, both Sean and I have talked a lot recently to the factors that have continued to keep the Australian dollar in a fairly quiet 76.50 to 78.50 range. We saw three of those factors this week. The iron ore price continues to trade in the early 60s. On Tuesday, the RBA minutes failed to advance the very mild easing bias. And finally, Chinese house price data suggests that the real estate market has left the very worst behind it. However, the outcome of the FOMC meeting saw the Australian dollar perform better than we expected. The Fed shaved 25 basis points off its median forecast for interest rates for 2015 and 25 basis points off next year as well. That saw the US dollar on the back foot, and the Australian dollar performed very well in foreign exchange markets. Last night, we traded to a high of 78.49. The upbeat message from the Fed saw global markets perform well, the S&P closing close to, and the Nasdaq at fresh record highs. That sets a good tone for global financial markets as we move into the Northern Hemisphere summer period. Now, it's not all been good news. In Greece, we remain without an agreement between Greece and its creditors. The June 30 IMF payment looms very large on the horizon, and the global financial press is openly talking about capital controls that may need to be installed as soon as Monday next week to prevent the flight of capital from the Greek financial system. Greece is a story we will be coming back to next week. Now, domestically, it's a quiet week, so we'll be keeping an eye on global factors. Greece, updates from Fed governors, and on Tuesday, we have the China PMI. It's certainly possible the Australian dollar will continue to probe to and possibly through the 78.50 level. We don't expect much strength beyond 79. These are all factors that we can talk about in next week's currency update.